morning, good afternoon, good evening, wherever you're watching around the world. Welcome to Spotlight Television. It's been my pleasure to be the host of this show for the past 12 years. As we begin season 13, I want to thank you for your support as we continue to bring you business leaders and entrepreneurs who are best of breed in their field. Today, we welcome financial educator, best-selling author, and certified tax specialist, Navi Dowty, who's been helping Americans end their retirements for over 40 years. Navi, welcome to Spotlight Television.
I'm fantastic.
Well, we want to thank you for being here, and I want you to give the audience a little background about yourself. Tell me how you got into this, how you became a certified tax accountant, how you've been helping people plan for retirement for all these years. How did you get started?
Well, I started in business right from the beginning. I picked cherries and raspberries in my backyard, delivered them to the local ladies, mowed lawn, had a paper route, worked at the local gas station. Then my grandfather died, and I watched my grandmother slide into virtual poverty. Typical widow in America lives as a widow for 23 years. My grandmother lived for 35 years as a widow, and they were pretty prosperous when he was alive, but they really didn't have their retirement account set up right. His pension stopped. He was a chief engineer at a paper company, built the giant generators that ran everything. But they didn't have things set up right, and I saw her slide into poverty. Then after I got out of paper engineering school at the university, I worked in industry for a while, and I was stationed out away from the home office. And a couple years went by, and then they wanted me to move back to the home office, and I was making way more money actually investing in real estate at the time. So I decided just to change professions and do that. And from that, I learned that income and profit is way more important than wages if you want to try and get rich. So that's kind of how I did. I realized that the mindset that we have nowadays, most people have nowadays, is really, really broken. Everybody tells you just hang on, the market will come back, things like that. And money seems to be managed just like it was for people when they're 25. And yet now 78 million baby boomers are going into retirement. So if you think about it, if you just keep on going with the status quo, your money's going to get eaten up by taxes, rising taxes, and rising inflation. It's kind of like the double smackdown.
Very interesting stuff there, especially in the time we're living in right now. There's a lot there to dig into. Obviously, inflation. I always tell people inflation's like a big ice cube in your garage, and the government keeps turning up the heat, and that melting away slowly as your purchasing power goes away. And so we can get into all of that, but let's start with, again, like what you do. When you think about tax and you think about retirement and you think about planning, there's a lot of things in there to focus on. Do you have a specialty? Do you focus on one specific part of retirement planning? What do you consider your specialty?
Well, I found over the years, first of all, by having all that experience of having actually developed investments for people myself, actually built them, I learned that what they're more interested in is saving taxes. I always remember I invented this thing to make sound not transmit between apartments. And I was building this apartment complex for a cardiologist. And he was in my office, and I had a mock-up of this system sitting on my desk, and I was very proud of it. So I'm bragging to him about it. And he said, "Oh, that's great. What about the tax savings?" Next day, an orthodontist is in my office. I'm building some buildings for him. Same thing, bragging about my system. And he says, "Hey, does that really work? Looks good. What about the tax savings?" So from that, eventually I learned that they don't care about my great invention. All they really cared about is the tax savings. So what I really do the most is I help successful people, usually business owners and entrepreneurs, reduce or eliminate unnecessary income taxes, capital gains taxes, and estate taxes. That's the focus of it. Like I said, the status quo is broken, And from that, I developed my on-tax family wealth Smiling Retiree process. 9 steps that get them from where they are right now to where they want to be.
So with 40, 50 years under your belt in this business, and you kind of just talked about your specialty there, are you seeing a specific kind of client? Are you seeing, like you said, entrepreneurs, business owners of a certain income, or a business that makes a certain, is it 500,000 a year, $1 million a year? What kind of client are you seeing most?
Well, I've been fortunate to manage money for some pretty wealthy people. And what I've been able to do is take the experience and the techniques that we've used for them and what I've actually learned from some of them, bring those to normal people that don't have 20 or 30 million dollars. So, but since I mainly focused on taxes, I can help the people that have tax issues the most. Now, naturally, everybody wants income up to a certain level. So those people are damaged by taxes too. It's just that my specialty is more for the people that are paying higher taxes.
And it's certainly an interesting time in this country as we see the IRS getting new funded, looking to expand agents by 80,000 plus agents out there. What are your thoughts on the tax code right now? You see this expansion supposedly of the IRS. We'll see if it goes through. What are your thoughts on that when it comes to the American taxpayer? What should they be most worried about?
Well, I developed a crystal ball to talk about taxes, so taxes and rising interest rates. So I think for people, if we can look at what could they do next year, what could they do in the near future? Here's a couple of ideas for people that aren't in a really high tax bracket. One of the things is that the $600 above the line or the front page deduction is now gone. A lot of people will come in next year and bring their taxes in, have us wanting us to do their taxes, thinking that they still will get that $600 deduction, and they will not get that because that is the last of the COVID tax relief that's gone now. So they're not going to get that. They're only going to get their charitable deductions if they itemize. And most people in America can't itemize. You have almost $27,000 to $30,000, depending on your age, standard deduction, and your itemized deductions have to be more than that for you to itemize. So most of those charitable deductions are going to go wasted. Now, naturally, we would still encourage people to give to charity. They're just not going to get the deduction for it. So what can they do? Well, if they're over 70 and a half, they can send money directly from their retirement accounts to charities, and we would encourage them to do that. They can send it to donor advised funds. Then they can send money to the charity, which is their own donor advised fund, and they don't have to necessarily give it to the charity right away. The donor advised fund is the charity. They can build up money and give it when they want to. They can set up their own charities. We do that for people all the time. If you watch public TV, you'll see a show. It'll say this show was partially funded by John and Millie Jones Charitable Trust. Well, everybody can do that. You can set up their own. Then another thing that I get all the time, every week somebody will ask me, what happens? I know that I can stretch my retirement account payments, my required minimum distributions out over our lifetimes. But what about the kids? Do they really have to take that money out and pay the tax over 10 years? Well, they do. And so how do you fix that? Well, you have to figure out how much do the kids want to take out in a lump sum, and they're going to be getting this money typically right at the kids' peak spending years. So there are ways we can work some charity into that, and then the kids can stretch the taxes out over their lifetimes just like the parents. Another thing, with 78 million baby boomers going into retirement, a lot of them have parents who are spending a lot of their money for long-term care. Most of the money spent for long-term care, nursing homes, things like that, is self-pay. Only a few percent is paid by insurance, almost none paid by Medicare. Medicaid will pay if you're broke after you're out of money, but billions of dollars are paid by the parents themselves and the family. Well, the question is, who gets those tax deductions? And certainly the parents, if they pay for, let's say, a nursing home, they're entitled to the tax deduction. But most of them don't have enough taxable income to use those deductions. So where do they go? Well, they're just wasted. Billions and billions is wasted. Well, if you do it right, you jump through the right hoops, the kids can get those deductions. Imagine what it would be like if you had two parents in a nursing home, tragic as that might be, spending $100,000 each, and then the kids could have the $200,000 deduction. You know, how would that make their lives better? So that's another thing. Any good tax planner can show them how to jump through all those hoops to get those deductions.
Yeah, that's great stuff. And I know you have a YouTube channel, and I watch some of the videos on there, and you give some great tips on there as well. And I don't know if you have any other tips for 2023. Those are some great ones you already laid out. But speaking of family trusts, I think one of the things that maybe parents don't know, enough parents don't know and think about, especially when they think about passing on to their kids, is the idea of putting real estate in a trust and the difference in the tax implications if you put the house that the parents want to eventually maybe give to the kids or the kids are going to buy or take over, if you put it in a trust as opposed to just trying to sell it to them or give it to them, what the tax implications are at that point. There's a lot of difference if you put that real estate into that trust, isn't there?
There's a horrendous difference. If you just give it to them or sell it to them, the kids get the parents' tax basis. So you're right. They should always inherit it. Now it depends on the family circumstance, but just strictly from a tax standpoint, under the current law, they should definitely inherit it. Let me go back to just a couple of other quick things for the people that are a little more affluent. And actually, this first one, anybody can use this. You can use the Augusta rule. The Augusta rule says that you can rent your house to anybody for 14 days a year and not pay the tax. It's non-taxable to you. Supposedly about the U.S. Open in Augusta, Georgia, and who knows how that rule came about. But people say, is that really a rule? I can rent my house out and not pay the tax? Yes, absolutely. And then here's one for the more affluent. If you ever are thinking of selling your business at some point in the future, you may want to consider contacting us and we can show you how to convert it to a tax-exempt organization. That's kind of the ultimate tax bailout.
Yeah, and I also want you to continually throughout this interview give out when you could give it now maybe for the first time, give out your number, as you said, if people want to contact you. How do they do that?
Sure, they can get a copy of our tax checklist. My 199, I just gave a couple of them. There's 199 tax secrets on my checklist, as many as I could fit on two sides. They can get my Ultimate Family Wealth Smiling Retiree process, my 9-step process. And we've even got a little mini course that I've put together that if they want to contact my office, we'll send them a link to that. And even maybe a link to our new movie, The Baby Boomer Dilemma. They can call my office, 630-893-4142, or email me, Navi, N-A-V-I, at DuPageTaxGroup.com. You can probably put a picture of that up on the screen. They can go to my YouTube channel or my LinkedIn channel. There's a couple hundred tax tips on my YouTube channel.
Yeah, and like I said, I went to your YouTube channel, and it is really fantastic. You got some nice, concise tips for people to watch. And I think it was there that I heard you talk about the 3 financial tidal waves. So can you explain the 3 financial tidal waves to the audience, what they are?
Sure. I was sitting at a conference in New Zealand early in 2016, looking out the back window of the little cafe, and I saw the waves crashing up on the beach, and I thought, there are 3 coming financial tidal waves. I call this my ultimate financial tsunami, because what's going to happen, and this was a theory back then: rising interest rates, rising inflation, and rising taxes. Like I said, it was just a theory back then. Obviously now, rising interest rates and rising inflation's in the news every day. So, and taxes are set in the code to go up on January 1st, 2026. So those three things are no longer just a theory. Unfortunately, and I hope they didn't come true, but unfortunately, it looks to me like they're true. They're here.
I guess for people who obviously still have some years in front of them of earning, you think about 2026 and beyond. So, man, the planning is very, very important. Very good. So let's talk about some of your books. Obviously, I said you're a best-selling author. The Tax Secrets for the Smiling Retiree, you've already mentioned. Financial Success for the Smiling Retiree. You're known as the inventor of the unique Smiling Retiree process. Tell me about, what do you get out of writing books? Why do you do it? Every author finds different things in their writing. Tell me about why you write, and tell me about some of these books.
Well, I just wanted to write down. I had written chapters for, to different ideas to give to my clients. I wrote a chapter for Kevin Harrington's new book, the Build Wealth Like a Shark. In fact, that's another, we could send our viewers that chapter if they want. It's called the worst retirement strategy that almost everybody's using. So if they want that, we'll send them a copy of that. But I just consolidated all the things that I had written and given to my clients, as standalone things. I wanted to get that all written down in one place. So my best-selling book, Financial Success for the Smiling Retiree, is over 50 tips for finance. And it's very broad, so it covers the kind of covers the whole spectrum of, but mainly revolving around people going into retirement.
So let's talk about people when they come into your office or you meet with them, whether it's virtually or in person, and you kind of see what they're doing, and they're doing okay, they're earning, they're doing well, but they don't know all the tricks. They don't have all the decision-making skills that they need to really be maximizing their earning, their savings, their tax deductions, things like that. What's the first thing you point to? Do you say, hey, you're doing great, but you need to look at A, B, and C? Or do you focus on one specific thing and say, hey, here's what you need to change to take this to another level?
Well, the first thing that everybody has to do is, and it's all in my process. So my process is 9 steps. The first step in that process, actually there's 3 phases. There's the foundation, the obstacles, and then the strategy. The first step is always the vision. Anything you do, you have to have the vision. Alice in Alice in Wonderland comes to the fork in the road and says, well, which road should I take? And the Cheshire Cat appears up in the tree and says, well, where do you want to go? And Alice says, I don't know. And the Cheshire Cat, what's he say? He says, well, then any road will take you there. So, the incomparable Yogi Berra, what did he say? You better be careful where you want to go, because you might not, what did he say? You better be careful of, let me read it so I've got it exact. You've got to be very careful if you don't know where you're going, because you might not get there. You always have to quote Yogi exact. So one of the many great yogiisms. But it's got to be the vision. You need to know where you're going. I mean, it's always been said people spend more time planning 1 year's vacation than their entire retirement. I mean, if you don't plan ahead, if you don't plan what's going to happen, you're going to end up getting your money eaten up by taxes and inflation. It's kind of the double smackdown. And you talked a little bit about inflation. Alan Greenspan, remember Alan Greenspan?
Sure.
Fed chairman for seemed like forever. He used to not call it inflation. He used to call it confiscation, because that's really what inflation is. It confiscates money from the savers and gives it to the borrowers.
Yeah, it's an amazing time we live in now. You think about Alan Greenspan, as you mentioned, and we never got used to these CPI, PPI, Fed meetings. Like now everybody's hanging on every one of these. We all know what they are. We all know when they're happening. And when Alan Greenspan was there, the old joke was they used to try to take a photo of him walking with his briefcase and see if the briefcase looked big or if the briefcase looked small to get an idea if he was going to raise rates or keep rates where they were. Most Americans really weren't in touch with the Federal Reserve and everything that it was. They all thought it was just another government agency. But it is interesting now, the time we live on with inflation, like you say, is really the most insidious tax there is. And the Fed raising rates and the federal and mortgage rates and all of that and how it affects Americans each and every day.
Inflation is really bad. The other thing that everybody needs to look at is the rising interest rates. I mean, you might think that would be better for people in retirement, but you've got a picture of my crystal ball. You probably want to put that up on the screen if you can at some point. If you take a look at that, I developed that. I gave a talk to some business people up in Boston a few years ago, and I wanted to have a visual for them. So if you look at the first part of it, the left-hand side of that crystal ball, you'll see rising interest rates between 1965 and 1982. They went from normal rates, just, whatever people would pay for money, to the highest interest rate in 100 years in 1982, 18%. You'd have to go back to the 1800s to find a time when interest rates were that high. Well, what happened to the markets? Well, stocks and bonds absolutely crashed. I was one of the first certified financial planners around back in the early 80s. And the marketing people, when you get those designations, marketing people come around, they wanted to sell me their advertising. I always remember this one fellow was in my office wanting me to buy advertising from him. And he said, whatever you do, never use the words the market. Never say mutual funds, because people had been losing money for so long in their mutual funds that they hated the market. The market didn't get back, and when we say the market, usually thinking of like the S&P 500 stock index, didn't get back to where it had been in 1965 until 1984. So big spring up in interest rates, big decline in the market. Then you had this long 40-year slide on the right-hand side of my crystal ball in interest rates. Actually got down to the lowest rate in human history, if you think about that. It's been a tool that all the world banks could use anytime they wanted to fix economic problems. Just lower the interest rates. Print more money, lower the interest rates. And what happened? Stocks and bonds, paper assets skyrocketed. And, some people would say a big bubble, maybe the biggest bubble. The question is, what happens next? Are we more like the time between 65 and 82 with rising interest rates and declining markets, or are we more like the long 40-year slide down to the lowest rates in human history and a big stock market and bond market bubble? And I think most people would say we're not going to go down another 16% for sure, right? So what happens next? And that leads to my three financial tidal waves, the ultimate financial tsunami: rising interest rates, rising inflation, and rising taxes. So I think we have a lot of rough sailing ahead.
Yeah, I think you're probably right. You think of those early 80s and the Paul Volcker days. Can't do that now. Paul Volcker was dealing with maybe $1 trillion of fiscal operating debt, now over 30 trillion. You look at what the Fed has to do here. A lot different fighting inflation these days and what they can do. What's the terminal rate for the federal funds rate than obviously what Paul Volcker did when he just nuked the market and raised rates as high as he had to raise them. Can't really do that today. So very interesting stuff. And like you said, I would agree that there's some rough seas probably ahead. Let's talk about some specific cases. Because, some of us, a lot of people out there, they see these commercials out there and, you owe $100,000, I'll get you to pay $10. And, I don't know, you see a lot of these commercials for a lot of these tax outfits that tell you they're going to get you out of your problems for pennies on the dollar. I don't know how much of that is true, but let's talk about your specific situations. Can you highlight an interesting case or project that you've worked on with maybe a client that you helped achieve what was a really good outcome for them?
Sure. Just last year, we saved a business owner $180,000 in taxes. That was
Wow.
pretty good.
Wow.
And all we did was I brought in a bunch of engineers, had them reevaluate his office building, redo the depreciation, and ended up saving him $180,000. And my kind of rule of thumb for that is whatever it costs to do that, paying all those guys and everything, we should be able to see at least 3 times the savings. And in that case, it was over 7 times the savings. So that would be one.
Wow, that's fantastic. And I guess continuing with that thought, you've done this for a long time. I'm sure you get a lot of gratitude and you get a lot of pride out of helping people and kind of setting them on the right path, whether they're older, whether they're younger. Do you have one specific thing that you point to and say, man, this is what I'll remember when I finally retire from doing this? Do you have a greatest achievement? Do you have something that makes you most proud? Or is it just the overall being able to help people, see them retain their wealth, see them pass it along to the next generation? What is it that you'd point to when you go lay on a beach someday?
Well, a couple quick things. I always thought back in the beginning, I heard, I was driving down the street, I heard a survey, I think it was Paul Harvey was talking about it, where he said the profession that the most people wanted to get out of was teaching. And I thought, wow, that's a tragedy because, arguably the most important profession in the country, they're training the next generation. In fact, my mother was a teacher. And I just always had the idea, what would happen if everybody was financially independent? Everybody was going to work, just doing the things they loved. Wouldn't that be a great country? And, kind of naive in retrospect, but that's what I thought. Coupling that with watching my grandmother slide into poverty. But I think on the list of things that I would have to say I was proud of is really not even a financial thing. I'd have to say that taking a little school to the U.S. first robot contest, many of the kids that hadn't even ever been on an airplane would have to be on the list. We invented a robot. We competed against all giant companies, Motorola, Bose, Rensselaer Polytechnic Institute, Naval Undersea Warfare Center even. And we won the Motorola Quality Award for the best overall robot in that contest. The head of the National Science Foundation, when he was presenting the Chairman's Award, which was presented at the White House, we didn't win the Chairman's Award. They gave it to Disney. The head of it, he said, we had to give it to Disney. So I guess that made sense because the next year the contest was at Epcot. But when he talked about us as one of the finalists, he said he called us the little company that could, from the little town that could, and the little school that could. So that, I think, would have to be on the list.
Well, Navy, this has been an absolutely great conversation. What great information for the audience at large out there. I want you to tell everybody how they can get a hold of you, where they can go to get more information. If you're out there and you're saying, man, this is the kind of information that I need, this is the kind of help I'm looking for, this is the situation that I'm currently in, let everybody know how they can get a hold of you.
Well, they can just go to NavyDowty.com. They can see a lot of interviews. Certainly the YouTube channel. Just look me up on LinkedIn. I have a bunch of postings on there. If they want to get in touch with me, if they want to get any of all those tax checklist, my process, our movie, they can call my office, 630-893-4142, or 715-845-4367. They can always email me at navy@DuPageTaxGroup.com. That's my tax planning firm. And that's probably the best way. And then, like I said, I also made a little mini training that we'll give to anybody that wants it, going through a brief overview of all the steps in the Smiling Retiree process. We can send that to them too.
Well, Navy Daddy, I want to thank you for joining us today on Spotlight Television. We'll link to all of Navy's information down below in the description. And folks, it's been a great 2022. We look forward to a great 2023, continuing to bring you the most innovative companies in the world and leaders that are getting the job done. And we continue to show you how they do it behind the scenes with all the questions and answers you've always wanted to know. I want to thank Navy Dowty for joining us again, and I want to thank you for watching. I'll see you next time on Spotlight Television.